Welcome back to Market on Close. Just a few minutes left in our trading day, so it's time for the big picture. Let's welcome in Nathan Peterson, the Director of Derivatives Analysis at the Schwab Center for Financial Research. Nathan, thank you for being with us today.
Great to be here. Hey, Marley.
Glad to have you. Now, what are some takeaways, on today's move lower? I'm looking at a lot of red across the board.
Yeah, certainly. I mean, obviously it has to do with, if you look at the price action on Friday, coming into Monday, we basically, got back all of our losses from Friday. I think there was an expectation that the escalation potential over in the Middle East would have been, very limited. So, of course, the news that's coming out today is impacting that. Oil prices are moving higher. There is going to be potentially some impact there. There's just a lot of uncertainty around there. So I think it's just natural that, given how well the market's been doing since April, that you might want to take some of the risk off of the table, some exposure off of the table, given some of that heightened uncertainty. And then if you look at the technicals, there's been some rollover modestly in the RSI, and that's a momentum indicator. And then around 6050 to 6100, that appears to be, roughly some kind of resistance. If you look back in January and February, we had a lot of churn around in this area there. So it looks like we have some near-term technical resistance there, a little bit of momentum waning, and then you have added uncertainty. And then, Marley, if you think about it, though, even with everything that's going on with the Middle East, we're only down 1% from last Thursday's close. And so that's not a lot of compensation for potential risk or even further escalation from here. So it makes sense to me that you're going to see markets down today, and I'd say they're holding up pretty well. And then the animal spirits, I feel like, are still in play. If you look at the likes of CoreWeave trading at a new all-time high, CrowdStrike trading at a new all-time high, Spotify trading at a new all-time high, etc. And we do have triple witching on expiration coming up this Friday. So I think that also is going to come into play in terms of having some volatility between now and Friday. It's oftentimes we say on that Friday for triple witching that you're going to get a lot of volatility, but it's not uncommon. Over the years, they've adjusted and modified some of their positioning so that we'll see some intraday volatility as they reposition for those quarterly expirations that are coming up on Friday. Then you add in the FOMC meeting tomorrow, and there's a lot of potential catalysts out there that can really move us around. So not unusual to see us down today.
Yeah, we have a few of those catalysts that I'd like to talk to you about, in fact. So first, let's start with May retail sales. Came in a little bit weaker than expected. How much of the drive down in the market do you think is tied to that weaker than expected report?
I don't think much, and I think because of the control group that was up 0.4%, that's going to feed right into GDP. That looked pretty healthy. It did come in. The headline came in below estimates, but we do know that we had some preceding strong retail sales data before that. So I think there was some expectation that we'd have potentially some give back in the report there. And then when I looked at, you just look at the price action when that report comes out at 7:30 a.m. Central Time, where I'm in Austin, Texas, and the futures, they were both going up and down. They really didn't take a distinct direction one way or the other. So it feels like, for the most part, the consumer is still hanging in there. It feels like that the potential inflationary impacts from some of the tariffs have been overstated based on a lot of the inflationary monthly data reports that we've gotten back in May and April. And so I don't think the market is putting too much credence into that retail sales. It really has to do with the Middle East, at least at this point.
Mm-hmm. And another major catalyst on the week, of course, is the Fed. FOMC meeting is underway right now. We're waiting to hear tomorrow. What are your expectations going into tomorrow? And specifically, are you expecting a dovish stance or a more neutral stance from Jerome Powell?
I'd say more of a dovish stance. I mean, I'm not sure if he's ready to position the markets for a cut in July. I've heard some commentary out there that that's the expectation, given the inflation data that we've gotten. He may not be ready to do that because, keep in mind, we do have that July 9th window that's closing for the 90-day pause from the tariffs. I think markets are still kind of expecting some potentially good news around the tariffs even before that July 9th window. But for, Fed Chair Powell, I think he would likely, it's going to be, we obviously don't expect a rate cut. I think the probabilities are we get two this year. There still is uncertainty because we still need to see that the EU, Japan, not even just China, are still willing to come to terms with President Trump. And if that doesn't happen, and let's say tomorrow that the Fed does set the table for a cut in July, and then we move towards that July 9th window, and we have, let's say, some more turmoil in the negotiations and higher tariffs come back on the table, that just kind of, murkies the water more for that July FOMC meeting. So, we'll see what the dot plots suggest, and we'll see if there's any revisions there. But the inflation side of the equation has been encouraging. The labor side of the equation, that's the other part of their dual mandate, looks pretty good as well. However, initial claims have been ticking a little bit higher. We've had some, negative revisions on those non-farm payrolls reports to prior reads. So, look, there's some softening in the labor market that I'd say, but for the most part, inflation looks to be cooperating, and the labor market, while showing some softness, it's not quite enough for the Fed to, be a little bit bold about announcing or setting the table for a rate cut at this point, in my opinion.
Well, we'll know very soon, right? Just a little over 24 hours away, we'll find out. Again, thank you so much, Nathan Peterson from the Schwab Center for Financial Research. We appreciate you joining us this afternoon.